Welcome back to Wall Street Podcast.
Welcome back. Today we're doing a deep dive into the Wall Street Journal, the July 9th, 2025 edition.
Yeah, cutting right to the chase for you navigating these markets. What are the critical signals?
Exactly. Let's extract those key insights. First up, corporate updates.
Well, Boeing's deliveries caught my eye. 150 commercial planes in Q2.
That's their highest number since 2023, right? A sign of recovery?
Hints of it, yes. But the market's watching production targets now.
Yeah.
Can they sustain it? That's the real question, not just clearing inventory.
Good point. And leadership changes too. Apple's COO, Jeff Williams, is out after a decade.
Subby Khan steps in. Seems like a continued push on, diversifying that supply chain. Makes sense.
It does. And Kirk Tanner jumping from Wendy's CEO spot to Hershey.
Interesting move. He did some unique things at Wendy's. Spicy Takis toppings.
Yeah.
AI voice ordering trials.
Shows innovation matters, even in fast food. Drives these kinds of executive shifts.
Absolutely. Now, in M&A, Telenor's bulking up its fiber business in Norway. Bought Global Connect's assets there.
Over $500 million, yeah. Solidifying their position.
And BlackRock's pushing further into private markets, acquiring Elm Tree funds.
What's interesting there is how they're apparently thinking about tariffs and labor affecting real estate. A bigger strategic play.
Definitely signals a shift in how big players view those risks.
Speaking of tariffs, the auto sector feels it. Porsche deliveries dipped 6% in the first half.
Even strong North American sales couldn't offset drops elsewhere. Germany took a hit.
And part of that's blamed on U.S. auto tariffs. It really ripples through.
It does. And look at Daimler Truck planning about 5,000 job cuts in Germany.
Part of a big cost-saving plan, right? €1 billion.
Yeah, efficiency push in a tough market. Proactive moves.
Okay, so that connects directly to the macro picture. The tariff situation is front and center.
Right. President Trump signaling that big shift on Ukraine, resuming arms shipments, even talk of a Patriot system.
Geopolitics impacting markets, defense stocks, international relations. Big implications.
And domestically, boom, 50% tariff on copper imports. Prices hit an all-time high.
Plus that threatened 200% levy on pharmaceuticals. That would be massive.
We're already seeing the impact of existing tariffs, German exports to the U.S. dipped significantly back in May.
Real-time effects on trade flows. No speculation there.
So where does this leave investors thinking about, say, ESG or AI?
Well, new research is questioning ESG's financial edge. Says it doesn't add return over traditional metrics.
That could really shake up how investors weigh those factors, couldn't it?
Could indeed. And then there's the critical mineral scramble. African nations wanting to process ores locally, not just export raw materials.
Yeah, restricting exports. It's about jobs, revenue, but also control over those vital global supply chains.
Yeah.
Big deal for tech, defense, everything.
And AI is just everywhere. Elon Musk's Grok chatbot had that controversy.
XAI called it an unauthorized modification. Raises huge questions about AI control and transparency, doesn't it?
Definitely. And the creative industries are pushing back. The Recording Academy CEO is backing that No Fakes Act.
Trying to protect artists' voices, likenesses, from AI misuse. It's a major battleground.
Even sports aren't immune. Wimbledon's electronic line calling had glitches.
Spark that whole debate again. Human judgment versus AI perfection. Or maybe AI imperfection.
And look, this theme of trust and integrity keeps popping up. Major League Baseball investigating a pitcher for spot fixing.
Manipulating small game events? That's insidious. Shows how global corruption can creep into U.S. sports now.
Big risk to the game's integrity. And in government, the Supreme Court decision clearing the path for potential federal layoffs.
Upholding that executive order to shrink the workforce. Major implications there.
And even local stuff like NYC real estate execs backing Mayor Adams against a rent freeze proposal, worries about revenue, investment.
Yeah.
It all comes back to confidence, stability.
Okay, so let's try to connect some dots here. This rapid AI integration everywhere, finance, culture, sports. How do industries get ahead of this ethically, not just react?
That's really the crux of it, isn't it? You see things like the No Fakes Act. It shows a realization that we need guardrails. It's finding that line between, technological progress and protecting human value, IP, a global tension.
And tying that back to the tariffs. If these policies stick, it could force a serious rethink of global supply chains, couldn't it? More regionalization, maybe even reshoring.
It forces companies to ask tough questions. How much do nations value economic security over, say, the efficiencies of globalization? Big strategic shifts ahead.
So from spot fixing to ESG data questions to AI ethics, trust and integrity seem to be the common thread. What vulnerabilities is this exposing?
Yeah, it feels like a system-wide demand for more transparency, stronger oversight, maybe a return to core ethics. The real insight might just be that trust. Trust is becoming the most critical currency, more than just efficiency or profit.
Trust is the ultimate currency. That's a powerful takeaway.
So as you navigate these markets, maybe the question is, how will these shifts in trust, combined with AI's relentless march, redefine value in your own strategy? Something to think about.